All right, welcome to our brand new video series where we deep dive into the world of commercial real estate innovation. I'm James Harkness. I'm a senior sales executive here at Altus Group, and I'm super thrilled to be hosting our first episode. In this series, we'll shine a spotlight on some of the most exciting advancements shaping the commercial real estate industry today. In today's episode, we'll focus on benchmarking innovation. We'll start with a look back at how benchmarking has been used historically and work our way to the present, where we're seeing a tremendous amount of innovation. Before we deep dive, let me do a brief overview of Altus Group for those that are just discovering us on YouTube. Altus provides industry-leading technology, advanced analytics, and advisory services for commercial real estate. Our global capabilities help clients manage risk and optimize the performance of their assets. If you're in real estate, you've probably heard of our Argus software brand. All right, Matt, let's get started. I'm hoping you can give us a little bit of a brief background and tell us about your role here at Altus.
Sure. Thanks, James, or thanks for having me on the show today. So I'm Matt LaHood. I'm the head of platform data and analytics here at Altus, which means my team is really focused on helping clients connect their data on a single platform, transform it into actionable insights, and enable scale and reliability across data-driven decisions. A little bit on my background. I've spent most of my career in financial services. I've worked for everything from startups, a couple of different startups, to small, well-established consulting firms, to leaders in data and analytics like FICO. Here at Altus, one of the things that really attracted me to the company was just the ability to learn a new industry, but also work for a company who has a great vision in terms of really exploding the amount of data-driven decisions that can be made. The vision for the platform, and more importantly, the data asset that we have that we can use to help companies make these decisions.
Absolutely. The potential of all of the data and the capabilities that we have are really, like I think you said, starting to explode. But let's turn back just to commercial real estate. Why benchmarking and why is it so important for the commercial real estate industry?
Sure. I think it's important for a number of reasons. I mean, not just for commercial real estate, but any investment decision that you're making. I mean, if you think about your own personal situation, maybe you have a 401k or other type of investments. The first thing you're going to do is look at a fund, look at its historical performance. How did that do against the benchmark? What other risk factors, or what is the risk profile of that? And really make the decision on what you're going to invest in. With commercial real estate, obviously we're not there yet in terms of having that level of access to benchmarks. But I think because of that, the value of them is even greater than in other industries. If we look at commercial real estate specifically, we're not really known for data quality. So having a well-defined benchmark that has a significant amount of data that you can use to compare your portfolio against can really help improve transparency by offering some standardized metrics and insights, and really help build trust with your stakeholders while doing these performance evaluations and having them be consistent over time.
Absolutely. I think the benchmarking is going to help tell the story of what's going on in a portfolio, in a fund. And with the advances we've had in computational capabilities, moving software to the cloud, it's really quite exciting. But in terms of real estate today, how has benchmarking traditionally been done? And maybe why are we on this cusp of such an exciting pivot for the industry?
Yeah, typically today, it's not easy. There's a lot of data manipulation that needs to happen to get yourself set up to actually evaluate against a benchmark. So typically, clients would have their data spread across different financial and valuation systems, maybe even different platforms. And there's a real need to bring that data together first, to connect it all, aggregate it up to the portfolio level, and then go ahead and connect it to whatever benchmark that they're going to be using. typically what we see is that's done in Excel. And what we've heard from our clients is that that can be problematic as you own that fund for a number of years and you're doing that quarter over quarter over quarter. Those Excel sheets can be large and unwieldy and really prone to errors.
I've found that there's so many folks in the industry that are spending time maintaining their spreadsheets. And I think kind of, if I could summarize what you're trying to do, is like make an easy button to allow benchmarking to just be a real integral part of the analysis people are doing on their asset, their fund of fund performance. And so, maybe what are some of the other challenges on, relying on valuation benchmarks and some of the challenges clients are facing? Can you, because it's not easy, and I want to open that up a little bit.
Right. So outside of the technology challenges, one of the other challenges that we've heard from clients directly is just data availability. Like they have a hard time finding a single source of data that covers the depth and breadth of the analysis that they want to do. So oftentimes they're stuck going out, sourcing other data providers, trying to find different ways to get at the performance information that they're looking for. Typically they're using sources that weren't intended for that, but it's the best that they can do. So there's a lot of inefficiencies there for not producing the results that they're actually looking for.
And what about other industries? I mean, clearly real estate is one of the, oldest and best asset classes to invest in my opinion. But, what are we seeing in other, industries? You have a bit of a different industry background. You're not, call it real estate. It hasn't been your entire career. And so can we double click on that a little bit?
Yeah. So I think with other industries, there's definitely some advantages that they have. I think one of the biggest ones is just the transaction volume. So if you're looking at equities and just the number of trades that happen on a daily basis across the board, really differentiates that asset class from what we have in commercial real estate. And especially over the last couple of years where there haven't been a lot of transactions in the market, sort of puts us at a little bit of a disadvantage.
Yeah, I always also like when I'm talking to clients, talk about Moneyball and what we're trying to do isn't quite Moneyball like they did in Major League Baseball, but it is another industry where analytics are important. Yeah. And I mean, if you think of education, you think of any kind of manufacturing, people want a rating. They want to know how they're doing. And I think real estate, we're now with this data sources that you're talking about and the computational capabilities, we're really kind of going to be at an exciting point in the industry. So why benchmarking specifically was ripe for a change, and why is kind of all of these different parts coming together, and how are you kind of positioning the products to drive this innovation with our clients?
Yeah, I think it's just like you're saying, there are a number of factors that are just really coming together. When we talked about the technical challenges, the outdated systems and methods for aggregating data, the limit data availability, and then you pile on top of that some of the macro economic factors that we've had and other factors like the changing in interest rates, and then just changing in patterns, changing in work patterns, changing in real retail patterns, really make this a problem that people are focused on and need a real solution for.
It had a couple years of not the greatest performance in the industry, even, in terms of investors making their allocations, but to change and to pivot, benchmarking could be one of those tools that clients of any size use to go forward. And I always look at benchmarking like a smaller client can use it to outperform a larger client. A larger client can use it to really understand how they are delivering extra value for their investors. And I think that's just so important to realize, is that these tools are really going to be across any size of investor. So, Matt, when you and I go and buy a real estate property, we could maybe use benchmarking so we could compete with the larger players out there in the industry. But with that pervasiveness of benchmarking, it really does require kind of some standards and reliable benchmarks. And so how has that also impacted this lack of standards and a lack of kind of an approach, like, for instance, what we see in the public equities market or the public fixed income
Yeah.
market?
Yeah. I think the lack of standardization really makes it difficult. It really puts people at a disadvantage, especially investors when they're looking to assess performance, manage risk, even just compare strategies against each other, right? Without that benchmark to do the comparison against, it makes it really, really challenging. So it could lead to inefficient capital allocation, could impact the asset selections that companies are making, and really just, have a lot of uncertainty in where they're performing at today and where they should be moving in the future.
And have you found that there are any particular sectors within real estate that maybe make benchmarking more challenging? Because clearly, once you have a standard, that's one thing, but you need to have data across the sectors. And if you're a multi-sector investor or even a specialist, you want to be able to have that comfort that what you're being compared against reflects the sector that you play in. For instance, if I'm playing Major League Baseball, I want to be compared against other baseball players, not against, in my case, a National Hockey League player, or what I would aspire to be, a National League hockey player.
Yes, relevancy is definitely a big challenge with the data that's been available so far. But in looking across the different sectors, I'd see it as maybe not so much as different challenges, but maybe more specialized metrics or different views of metrics. So if we think about, somebody who's investing in industrial, right, and they have a lot of warehouses that have single tenants in them, occupancy can be looked at in a certain way. You have somebody else who's in hospitality, right, and they have a range of hotels, right, then the occupancy there with the rooms is going to be different, and they probably want to layer on things like average daily rates, things like that. But I think it's more about, where are you at and what sort of specialized views would you like to see based on the investments that you've made?
And how, so knowing that, so how are firms compensating now for that lack of data, or, are there current gaps? So what have you seen when talking to clients? Because I know a lot of what you design into the products and the features really are based on client feedback, but what are those gaps?
Yeah, I've heard, just some of the stories that I've heard is clients will actually go out, they'll listen to earnings call, they'll get the reports that are the financial reports that are made publicly available, and they'll scan through there and try to pick up different indications of different metrics there, different indicators of performance, and really try to use that to help shape their narrative. But again, that gets at to, I don't have the data I need, so I'm going to go out and try and source whatever I can to try and help make decisions and craft my narrative.
To build that narrative. Yes. And so, what are some of the other gaps though that exist? Because, you talked about data quality, you talked about methodology, you talked about the, need to kind of embrace the change management that benchmarking can impact on a portfolio or an asset manager or even an investor. So, can you tell us a little bit about the gaps?
I think those gaps are really ripe for closing now. If we look at the access that we have to both structured and unstructured data, we look at the AI-driven analytics that are available today, I think we really have the tools and access in place to really modernize benchmarking. And some of these things weren't there before. Given some of those unprecedented challenges that we talked through, I think it's really important now for companies to really start to adopt some of the new technology that's coming out to really help them manage risk, drive better insights, and really get more focused on the data-driven decision.
Yeah, because it's competitive out there, right? So having a benchmark really is part of that story that they need to tell. So back in September of 2024, Altus launched at our client conference called Connect, our new Argus intelligence platform. And I just wanted to, dive into a little bit of what that was like, designing, working with clients to understand, okay, benchmarks important. Altus, we feel we've got the data, this really excellent quality data. We think we have the methodologies. We're getting feedback from clients. But what was it like for you and your team? And maybe some of the inspiration behind what has been launched.
Yeah. So we first started off earlier that year with a lot of market research that we wanted to do across a wide customer base, really just trying to get as much input that we could on the specific challenges that our clients are facing. So that way, when we design the solution, we can make sure that it's specifically addressing those challenges. I think the top three things that we heard, not surprising, it's going to be the data that I need is not readily available. The data that is available lacks relevancy for my business. And then the third one, like nobody actually came out and said this, but we could tell based on the comments that they were making, was that nobody provides intelligence, right? And so knowing the data asset that we have, knowing the platform that we're building, and the fact that we want to bring that intelligence, we just don't want to put numbers out there. We don't want to say, here's the average market rent and then leave it up for the individual to do the work. We want to bring the analysis and unlock those capabilities of the platform. They're really focused on the clients and trying to solve their challenges was the inspiration behind it.
Solve client problems, rely on this data quality. It makes sense. What's different in what we are at Altus providing the market? Because it's not necessarily a time-weighted return investment performance. This is like really peeling away layers of the onion and really determining, why is my cash flow different? Why am I seeing differences in yields? And taking that right down in some cases, right to who the tenants are and how that tenant's contributing to that valuation comparison.
Right. So that's exactly right. That's focused on the benchmark side. I would say there's two sides of what we're bringing and things that are different. The first is going to be helping clients solve some of that technology challenge. So all of that data work, all of that pre-work, we're really shortcutting for our clients. So if you're using Argus Enterprise will automatically share the modeling data with the platform. It's up to the client to choose what models to share and whatnot. Once those models are on the platform, they're really free to create any combination of portfolios that they would like. So they could exactly mirror their fund structure, or they could create something based on some analysis that they want to do. And then those portfolios are automatically available for them in Benchmark Manager. So all of that upfront work, we're really trying to shortcut and streamline and provide flexibility on. And then, like you're saying, on the benchmark side, what we're really trying to do is hone in on the factors that are driving performance. So one of the first numbers that you're going to see is the difference in performance. How have my values changed? How has the market changed? And what is that difference? And then from there, it breaks it down into yield and cash flow and allocation and selection. So you can see those and how they directly relate to that change in value. And then we get into a whole host of details underneath. So for the yield and cash flow, you can see the detailed metrics there for the portfolio. And then you could drill down all the way to the asset level. And you could look at the history as well. You could look at all of those metrics over the last 5 years. So there's really a lot of information that we're providing there. You can filter by property type, filter by CBSA, so a geographical region. And then because you're on the platform and all of the data is connected, as you're doing your analysis, as you're getting down to that asset level detail, if there's one that's really overperforming or underperforming, you can simply click on that, go to the asset section, and there you'll have all the history, all the models, and you can do any type of analysis or investigation that you might need to understand further what's driving the over under performance there.
And I love it because it sounds like it's going to be available to anyone in the organization. So if a portfolio manager wants to dive in, they can. I mean, today that sounds like it's a little bit of a challenge for clients to even just assemble this data. Now, your investor relations folks, everyone can kind of dive in. And I just think that's going to create a dynamic at our clients where they're going to be focused on how do we get better, or why is this particular asset not doing what we intended it to do. So even comparing your acquisition model to your current quarter, comparing quarters, that sounds like a lot of fun. If you're kind of in a seat right now
Yeah.
where you're trying to do
And
this
that's,
work and you're like, oh, well, there goes another weekend. But at Altus, how are we making sure that, our clients are going to be confident in the accuracy, the reliability of what we're, putting up on the screen, and then also the scalability? Because on the scalability side, you did touch on this ability of models transporting from Argus Enterprise into the new Altus Intelligence platform and Argus Intelligence. So can you touch on that reliability and just, because I really want people that are going to embrace this solution to feel like, it's like the Intel inside on your laptop when you bought it from Intel, 20 years ago or whatever. Like what are you doing in that area?
So we have a large team of data scientists who have really been working with this data for a couple of years now. And so they're very familiar with the usage patterns in Argus Enterprise and really understanding the data that's available for the benchmark. And so they're really adept at understanding what should and should not be used for analytics. And as a result, we have a really strong library of business rules, machine learning, advanced outlier detection that we put every model through to make sure that it's going to produce reliable, consistent results that we're looking for and want to have in the benchmark.
It sounds like, Matt, that in embracing these tools, it's going to have a ripple effect, and that our clients and the industry will rely on valuation benchmarking. So they're going to need to have more accurate models. They might even want to update their models more frequently. So that change is not just the product, but it's also the behaviors. And that seems to me to be almost like a self-fulfilling thing, where if data quality improves, more people realize that this data quality is important because they need to complete their benchmarking story. It really does have an impact. Do you agree with that?
Oh, yes, for sure. The more people see the power of the data, the better they're going to want that data to be, and the more that they're going to want to do with it. And so just exactly like you're saying, having more parts of the model, having finer detail and more refinements on it to make sure that that data is accurate and clean and flowing through, and even increasing velocity. I could see all of those things happening once people start to see the power of the data and what it can really help them do.
So the build is data quality, data methodology, capabilities within the tool to allow a particular type of analysis to happen, but always really just kind of improving and taking it to the next level in terms of its impact. So can you touch a little bit more on how benchmarking is going to evolve in CRE? Because I got to tell my one joke, real estate's always location, 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 but it sounds like it might be moving to benchmark. Like, how am I doing on a relative basis? Because it's got to be a story that's more than just happen to pick a good location.
Yes, there's quite a few things that we have in the hopper already for this year. So we'll be releasing the first version of Benchmark Manager in March. And then what we want to do from there is really enhance so we have all the major property types. We have 15 of the largest CBSAs in the US. We want to expand all of those categories. We want to get all of the property subtypes in there. We want to expand the CBSAs, and we want to make this a global product, not just focused in the US. So then we can have that real relevancy for different clients and their portfolio.
And so
from there, I think I think it would be really cool to do things that are more forward looking, right? Once we have the basics there and we have all of the relevancy for people, right? Currently, we would be looking at the past quarter and the 5 years of history. But if we could turn that around and start to look at forward looking metrics, I think that would be really powerful and something to really take benchmarking to the next level.
Yeah. And it sounds like your references back to machine learning and some of the experiences we have here at Altus and launching these types of products that, we've been talking about mostly as kind of an ex post backward looking, but that forward looking, and that sounds like it'll be really powerful, Matt, and something that we'll have to probably discuss on the next series of this video interview that we're doing here at Altus, because that I think will really be a game changer and probably allow us in terms of private real estate to catch up with some of the other investment asset classes as well, where they do rely on some of that forward-looking type of analysis to really ensure they can understand where they've been and then also where they think they're going, and do that with statistical significance and that confidence. So really enjoying hearing about all these exciting changes. And so knowing that the platform is going to be highly capable, we feel very strongly in the quality of our data and our methodologies. What kind of advice do you have for CRE companies that want to use benchmarking and are thinking about, okay, how would we do this change management exercise? Or even like, what story will we start to tell our clients and our investors? Because we can now talk about ourselves in a relative basis, not an absolute context.
Yeah, I think the biggest thing is to get in early, right? It's going to be a powerful step forward that clients can make to enhance their strategic decision making, and anything that they could do to sort of get on that train, start using the data, start understanding it, like you're saying, start refining what they're doing with their models. I think the earlier that they can get in and adopt a solution, any benchmarking solution is going to put them a step ahead and really forego any risk of being left behind.
That makes sense because they understand discounted cash flow analysis. They understand the importance of having consistent valuation policies. And so they know what's going on at that asset valuation level, move that to understanding, okay, how is this bundle or this aggregate of assets doing from the call it portfolio context, and then show that portfolio in real time around how it's doing. And even like you were also alluding to, pulling that back to each individual asset's contribution to that over or under performance of your valuation change. I just think it's going to, allow us to really go from a walk to a sprint very quickly. And it's a competitive industry, and hopefully those early adopters will use that to, again, help bring this change of embracing benchmarking and relative analysis into the industry. And in terms of, we talked a little bit about the history of benchmarking. We talked a little bit about other industries. We talked about the importance of how you build this product. What about other key takeaways that you'd like to share on the future of benchmarking and more on how firms can prepare for this?
So I think some key takeaways are really get in so you can be more proactive with your data-driven decision making, right? There's a number of different decisions that this can help across the board. The earlier you get in, the better off you're going to be. And then when you're looking to make a decision on which way to go, right, you want to make sure that whatever solution you adopt is really unlocking the analytics, right? And so is it helping with the data? How much time are you going to spend consolidating, merging, aggregating your data just so you can get to the analysis? You really want to look for a provider who's going to help take some of that heavy lifting away so you can spend most of your time on the actual analysis and making decisions on what to do with your particular asset or portfolio.
So start with ensuring that you have the right approach to doing relative analysis, making sure that you're going to really let your teams that are working on these portfolios, these assets thrive, because all of a sudden it's not about taking hours to assemble data, taking hours to check data, to back test data. It's more of like, we've got this in the platform understands the value for that period we're looking at. And then now we're going to put that value, which is associated to an address, into a portfolio, and then shock that portfolio and really understand why we are seeing some of these behaviors. And is it due to the characteristics? Is it due to the property management? It really does sound like a tremendous innovation. So Matt, I want to congratulate you and the entire Altus team for bringing this innovation to the market. I can't wait to see what the team continues to produce. And, also just thank you for taking the time, because I'm sure you've got a product pipeline that's dynamic and needing to be updated. So you're the first guest on the Altus Group's Commercial Real Estate Innovation video series. For everyone out there who has enjoyed this conversation, please click the subscribe button, because we'll notify you when there's new videos coming out onto these different media sources. And of course, if you enjoyed the content, please hit a like, and we will be sure to come back very soon with more videos in this series as we continue here at Altus Group to explore other areas of innovation in the commercial real estate industry. So thank you very much. And that's a wrap.